Okay, well, it's 1 o'clock. It is time for the monthly Thriving Agent webinar series. I've got a couple things to share with you this month. Since we just passed the quarter end, second quarter of 2018, I think it's important that we talk about estimated taxes, and hopefully you've already remitted your first and second quarter estimated tax payments, but in case you haven't, I thought I'd share with you a tool that I put together to make it easier for agents to determine how much they should potentially remit to the IRS and potentially a state. In Ohio, we have the benefit of a small business deduction, so most agents are not paying any state income tax on their commissions right now, or the net income. I know that's not the case in every state, but this particular tool is designed right now for Ohio. We can modify it for other localities if we need to. It's again a spreadsheet that I put together quite a while ago and have shared it in various presentations that we've done. The tool is called a commission allocator, and I'm going to share it with you right now. And I'm also going to open it up on the webinar so you can see it. So this tool has 3 different tabs to it. One is more or less an instruction tab to tell you what the purpose of it is. It's generally designed for sole proprietors and S corporation real estate agents. The first tab is for sole proprietors, and essentially I'll walk through this with you. At the top here is the result of the work of the spreadsheet, telling you essentially roughly how much money should be remitted to the various taxing agencies that we're tracking here. We're giving you an estimate of how much money should be moved from your business to your personal bank account for you to use as you wish to pay your personal expenses. This red box, you would select what your effective tax rate is. Now, you don't really know necessarily what that is specifically for the current year, but you can use last year's result as a rough estimate. The effective tax rate is essentially your total tax divided by your total income, or your taxable income. In this case, we're going to use 25%. The yellow box is indicating where you can fill in various fields to change the results. So we're going to work this from the amount of commission that you may have received during the month or the quarter. I prefer to do it, or I suggest you do it, depending on the significance, possibly every time you get a commission check. But at least on a quarterly basis, you can use this to determine how much you should send in for that quarterly payment. I like to suggest that you do it as commissions come in, simply because it's easier to take smaller bites of your tax bill as you receive money than to set it aside and then try to send in a large amount of money. It can be done. It's done all the time. It's just, it just feels better to a lot of people to send in smaller dollar amounts. So you would put in the amount of the commission that you've received for the time period. In this case, I'm saying that this agent received $5,000 in commissions. And again, that could be one commission. It could be commissions over the course of the month or the quarter. So that's step 1. Step 2 is to roughly estimate how much of that money can be moved safely, reasonably to your personal account for personal expenses, paying your mortgage, your groceries, whatever personal expenses you may have. And we're going to call that a draw. And we're saying that in this case, we're estimating that it's safe to allow the business owner to move 25% of their commissions to their personal account without dramatically negatively affecting their business. That number, that percentage, can be changed. Now, the reality is that some money needs to stay in the business to fund the current month or current period business expenses until the next set of commission checks come in, because you're going to have E&O charges, you're going to have auto expenses, you're going to have meals that you incur taking prospects or advisors or whomever it may be to a meal. You're going to have travel costs, all those sorts of things that it costs to run a business. So you can't take everything out and put it into your personal account, or you shouldn't anyway. So we use, in this case, 25%. Like I said, you can make it 30%. It just changes the results of the calculation. So if we say it's 25%, that means we can move $1,250, $1,250 directly to our personal account and use that however we may wish to use it. And we scroll down, and step 3 is to determine what amount we need to set aside and remit to the various taxing agencies. So as I said before, in Ohio, we have a pass-through entity credit. So unless your income is high enough, you're not going to pay any Ohio income tax. So we have 0. Then you have to calculate your self-employment tax. And that is a tax that is based on your net income from operations, your revenue minus your expenses. So that tax is 15.3% of your net business activity. And what we've done here is shown what percentage of the total commissions is being set aside for this purpose. Now, this calculation, like I said, is based on net income. So we're making a couple of assumptions. Out of the $5,000 in commission that we earned, we're estimating that about 40% of that is going to be for business expenses. So we're taking the difference, the $5,000 minus the 40%, to get to the taxable number. And then we're taking 15% of that number. And you can see the pop-up there. It says based on 60% of commission. So your self-employment tax is $459. That's an estimate. It's not going to be exactly right. We're just trying to get you into the ballpark of not remitting too much estimated tax or too little. So then we have to calculate your income tax. This is the income that gets added to your spouse's income and your total joint filing income if you're filing with a spouse, to determine what your overall income tax liability is on your net income. Could be between 10 and 39.6%. Most clients are going to be 15 to 39.6 based on their income. And as we indicated above, we're using 25% as our effective rate, which means that roughly 15% of our commission is being paid towards ordinary income tax. And that's determined by taking the $750 divided by the $5,000. This is based on 25% of the 60% taxable income. And again, you're not going to pay income tax on $5,000. You're going to pay income tax on $5,000 minus the business expenses. And again, we're estimating that to be about 40% of your revenue. So 40% of $5,000 multiplied by 25% gets us to $750. So those two added together gets you to $1,209 in this case, federal tax that should be remitted for the time period, based on a month, based on a commission, based on a quarter. At least every quarter you need to send whatever this result is into the IRS. Again, I recommend you do it on a commission by commission or at least a monthly basis so the amounts are smaller. To the right here, we have some links to the federal 1040 estimated tax coupons. I know they're pre-printed with which quarter you're paying, quarter 1, 2, 3, or 4. I assure you the IRS will accept payments anytime you send them. If you just put the time period and your Social Security number on the check that you send in, they will accept it. You want to put quarter tax year, which tax year you're applying the payment to on the memo, tax year 2018 or 19 or 20, whichever it might be, so that they apply it to the right period. You're not so much worried about them applying it to the wrong quarter, because they will give you credit for it based on the date that they apply it to your account. So which quarter it applies to is already taken care of. We also have links here for Ohio. If you have a state, if you're from another state, we'll be happy to send you links to whatever state that might be in their estimated tax payments, or estimated tax coupons. So the fourth section is what you leave behind in your business. So we've received a commission, we've paid ourselves, and we paid the IRS. Now we're going to pay our business expenses, right? So we want to leave something in the business to operate on. And based on my experience with real estate agents, it costs about 40% of your revenue to operate your business. Some agents are less, some agents are more. 40% is the number that we're using for our example here. So if you operate a business that is more efficient, you could reduce this percentage. And the way we've determined it for a sole proprietor is that we've looked at your tax return, your Schedule C from last year, and if you look at line number 28, that is your Schedule C net income. So I'm sorry, that's your total expenses on Schedule C. If you divide that in to line number 1, which is your total revenue, that will give you your cost of doing business or your overhead costs. And again, I'm using 40% simply as an estimate. It could be 30%. It could be 45. However you change that, it will change the amount of money that you need to leave in your business. Again, we're going to leave it at 40%. So out of the $5,000 that we received, $2,000 of it is going to stay in the business to cover operating expenses going forward. So that means if we pay out 40%, we send the IRS $1,200, we move $1,200 to our personal account, it means we still have about $500 in the business account that we could take out and use personally. We can leave it in there for additional business expenses. If we look at the total percentages, 10% is left in the account just as a cushion, 40% came out as overhead, 24% came out as taxes, and 25% went out to us personally, giving us a total of 100%. That's pretty straightforward. Again, the numbers are obviously hypothetical, but it's a tool simply to give you a rough idea of how much money you should be sending into the IRS based on current year activities. You could simply take last year's tax liability and essentially divide it by 4 and send that in. And the IRS obviously will accept it, and you will probably be in the ballpark. But it will be based on last year's operations, not current year operations. If you are within 90% of your current year tax, you're doing good as far as the IRS is concerned. If your adjusted gross income is over $100,000, you actually have to use 110% of last year's tax liability to determine what your estimates should be for this year. So we're going to switch to an S corporation now, and things are a little bit different with an S corporation in that now you are operating as a separate business entity, and it has a couple of complicating factors in it that a sole proprietor does not. One is it files its own tax return, so that complicates your tax situation. But you also have to pay yourself wages as an employee of the corporation. So if we start at the top, we're estimating that our federal tax bracket in this case is 28%. Again, I have a drop down there. We have 0, in this case, Ohio tax rate. It could be 3%. It could be as high as 6%. Some states are as high as 10 or 12%. The red boxes are the taxes to remit. The green box is cash that can come out to the owner. And the blue box in this case is to be filled in to calculate the results. Then we're starting with the same $5,000 as our estimated commission for the time period. Again, whether it's a month, a week, per commission, or based on a quarter. So how do we determine how much to come out to pay ourselves? Well, as a shareholder, as an employee shareholder working in the business, you take money out of the company in 2 ways. The first is a draw, a distribution, very similar to what happens in a sole proprietorship. You simply write yourself a check that moves from the business account to your personal account. I'm still using the term check. It could just as easily be an electronic transfer, but the term check is representative of both types of transactions. In this case, we're saying that 15% of every commission can be moved directly to our personal account. In this case, that would be $750. The next piece of the transaction is how much do we need to pay ourselves in wages to ourselves as an employee? And that's a little more subjective. We have to pay ourselves what's called reasonable compensation for the work that we do in the entity. The draw is somewhat analogous to our return on our investment. Our wages are our earnings for doing work in the entity. It has to be reasonable. Most real estate agents earn on average somewhere between $29,000 and $38,000. So if you're in that ballpark, you would probably be considered reasonable unless you have extenuating circumstances. If you have staff or if you have contractors, other agents who do work for you, it supports the fact that your compensation is not 100% of the net income. In our solution here, we're estimating that our reasonable compensation is about 22% of our commission, which is about $1,100. Now, the complicating factor with this is that our compensation, our W-2, has Social Security Medicare tax tied to it, as well as federal and state withholding, and that's these other calculations that are going on to the right of us here. So we're not going to get the full $1,850 in our personal checking account. We're actually going to get closer to $963 because out of the $1,100, we're going to send the IRS our, as an employee, portion of the Social Security Medicare tax, as well as some federal withholding, and that's what we're looking at in these other calculations here. We're not going to cover this in detail right now, but essentially about $960 out of the $5,000 is going to be moved to our personal account, and we're covering some of our tax liability in that money. So step number 3 is to pay our taxes. We're going to pay self-employment tax or FICA tax, FICA, on our wages. That's 15% of our wages. We're also going to pay income tax based on our total income, that's either as an individual or as a couple. And again, as we said above, we're using 28% as our effective income tax rate. We're going to, in this case, we don't have any Ohio tax. We're going to have self-employment tax and federal income tax withheld. We're going to have federal tax, state unemployment tax, and federal unemployment tax that we pay on our wages. And the total tax that needs to be remitted is about $524. That's without taking into consideration our tax on our net income that we're going to pay, and we want to try to cover some of that through our withholding. So it gives us a total taxes to remit of $1,019. Now this $495 is also taken into consideration on our personal side. It reduces the amount of money that goes directly to us. We're covering our total, attempting to cover our total tax liability through our federal withholding. As your business grows, it will become more and more difficult to do that. There just won't be enough wages potentially to cover the Social Security Medicare tax withholding as well as all of your federal tax liability. So you may still have to do some estimated payments. Step number 4, again, we're covering about 40% of business overhead costs, and we're estimating those to again be $2,000. This number can be adjusted up or down based on actual experience to accommodate more accurately your particular business. Based on paying ourselves, paying the IRS, leaving some money in the company for operating expenses, in this case, we have a cushion of about $131. If this cushion or surplus ever goes negative, it means you've either left too much money in the company to be used for operations, or you've probably paid yourself too much money, in which case you can reduce your draw or your wages to compensate for that. If this number is significantly higher or more cushion than what you need, you can take out more money to yourself. For example, we can up that to $800 without potentially adversely affecting our business. Again, these worksheets are simply tools to give you a rough idea of how much tax dollars needs to be remitted to the IRS. And it gives you an idea of how much money you can move to your personal account to be used any way you want. So that's sole proprietor, S corporation, instructions. If a password ever pops up in there, I think it's just Cincy Tax Coach with a no uppercase at all. I would also like to bring to you for discussion is a conversation that I had with a client and brought in an attorney to also assist with describing to the agent how it is that they can operate the way we suggest. It's common for a real estate agent to operate under an LLC structure. Looking for a document here, and what that does is gives them. And again, I'm not an attorney, but theoretically, what operating under the LLC structure does is gives them some legal protection. And I'm not an attorney, so you got to check with an attorney to verify that and make sure your entity is set up and handled correctly. But from the tax standpoint, forming an LLC does not change your taxation at all. You remain taxed as a sole proprietor, and until an election is made by the LLC, you're just taxed as a sole proprietor. It does nothing for you from a tax standpoint. Now, elections can be made in the future that change your tax status. I'm trying to bring up a document here that change your tax status, but right out of the box, it doesn't do anything to change your taxation. You're a sole proprietor. So the question was, if a broker can only pay a licensed individual, how is it possible that an LLC can receive payments from a broker? Well, that's what I'm trying to bring up here. And for some reason, it is not cooperating. So I went back to the Ohio Revised Code and looked up chapter number 4735 for real estate brokers. And it talks about who can be paid a commission. And if you'll bear with me for a second, I will get this to open up. I've got it on my screen here, but I can't, for some reason, share it. I can see it. Let's see what we do here. If I need to print this. It really does not want to open it up. I have two different browser windows with the document, and let's try it one more time. It does not want to cooperate. Anyway, so I'll come back to my mug here. So 4735 has to do with real estate brokers. And under 4735.20 section C, it says a licensed real estate broker may pay all or part of a fee, commission, or other compensation earned by an affiliated licensee to a partnership, association, limited liability company, limited liability partnership, or corporation that is not licensed as a real estate broker on the condition that all of the following conditions are satisfied. And the very first one is really probably the most applicable in most of my clients where we've done this. It says at least one of the partners, members, officers, or shareholders of the unlicensed partnership, association, limited liability company, limited liability partnership, or corporation holds a valid and active license issued under this chapter. So essentially, you need to check with your attorney, but as long as you maintain a valid real estate agent license, you're validly licensed, and you're the officer, or partner or member of the entity that's getting paid by the broker, you shouldn't have any problems. And that goes back to the question that the agent asked me is if the entity is not licensed, if the LLC is not licensed, how can it receive the payment from the broker? Well, it's because of the Ohio Revised Code allows it. Now, if you're in another state, I know we have viewers on here from other states, you'll need to check with your attorney. They may need to review the specific statutes that apply to real estate agents and real estate brokers in your state. It's not a federal issue. The IRS doesn't really care how you get paid or whether it's appropriate for a broker to pay your LLC. Someone needs to report the income and pay the federal tax. But under state law, it can be an issue. So you want to make sure that you're doing business in the appropriate manner. In some states, you can operate as an S corporation, but the state disregards it. So your entity, your business, ends up paying tax as if it were a C corporation. So you need to check with your local counsel, someone that's familiar with real estate agent and broker law in your jurisdiction or the jurisdictions in which you operate. Because if you're doing business similar to where we are here in the tri-state area, you have Ohio, Indiana, and Kentucky. Some agents are dual licensed or triple licensed so that they can participate in transactions across state lines, local state lines. Some of our clients have Ohio licenses as well as Florida licenses so that they can handle property and work in Florida. So you need to check with your legal counsel to make sure that your business entity can receive payments from the broker in the intended fashion to affect the tax treatment that we're looking for. So those were the primary things that I wanted to cover today. One was making sure that you had a way to calculate your estimated tax payments and make sure that you knew roughly how much money you could safely take out of your business to pay your personal expenses. And then also to make sure that you understand that at least here in Ohio, we have a mechanism in place so that agents can form an entity, whether it's a corporation or an LLC, and still be paid from their broker. They would need to file a W-9 form with the broker to tell the broker who is to be paid, the name of the LLC, the federal ID number of the LLC. But based on my understanding and based on what the consult that I've received from attorneys is that based on the Ohio Revised Code, it's not a problem. Again, it's section 4735.20, chapter C or section C that refers to it. If you have any questions, I'd be happy to indulge you and see what we can do to help. So the rest of this session will be open to your questions if you have any. I'll try and share that document again or that web page. Let's see. Yeah, for some reason that just does not want to open up. Let me see if I can print it to a PDF and share it with you that way. There we go. There we go. So this is off of LawWriter, and it is LawWriter is a website that contains the Ohio Revised Code, and the website is codes.ohio.gov/orc/4735.20V Victor 1. And that gives you the actual code section that applies to brokers and paying out commissions. All right, folks, it's up to you. I'll stay on here for another half hour or so. Just want to open it up to you for questions. Let me know what it is you're looking for, and I'll see what I can do. Okay, I'm going to start a timer. We're going to go 5 minutes or so. If there are no questions, I will wrap it up. And the next time we'll be back will be on August. Let's see, August 29th, last Wednesday of the month at 1 o'clock. If you guys think a different time would be more effective, let me know, and we will consider making a change. I have a speaking engagement in October for the Board of Realtors. Or actually, it's not the Board of Realtors. I think it's for Comey. Let me see if I can give you the dates of that. I think it's in October. No, I'm not seeing it, but I'm pretty sure it's in October. I'll be speaking for Comey and Shepard at one of their larger events. Okay, folks, I don't see any outstanding questions. Oh. There may have been previous emails that went out. We changed the start time to 1 o'clock. Let me double check. I have 1 o'clock on everything here. All the configuration says 1 o'clock. Yep. Everything says 1 o'clock. So that's the scheduled time. If something went out prior to that or indicating a different time, I apologize. I'll see what I can do to get that corrected. If you can forward me that email, I would appreciate it. That way I can maybe track down how that happened. Again, we're planning on 1 o'clock. If that time doesn't work, I'd be happy to switch it to 3. Just trying to get as many agents as we can involved in this community. Double check on questions. I don't see any additional questions. I will look forward to seeing everyone in August. If you can put it on your calendar, invite your friends, invite your colleagues. It will be August 29th. We'll get the time straightened out, get them registered, and everyone will get a reminder email, hopefully with the right time. Thank you for joining us. Everyone who registers will get a recording of the program. I think if you get the replay, you can also ask questions at the replay site. I look forward to seeing everyone in August, and if not before. If you know of a group of real estate agents that need a speaker, please let me know. Give them my contact information. We'd be happy to come in and do a continuing education course for your group. Again, I'll see you August 29th. Take care. All my best. Thank you.